In recent times, we witnessed a notable trend in the VFX industry, the emergence of VFX studios on the stock market. While this may seem like a bold step, it's a little strange after all these years of VFX studios going to public. So why are the companies entering in the stock market? The first reason is business expansion. One of the main reasons VFX studios are going public is to secure a mass infusion of capital. Going public through an IPO allows these studios to raise substantial funds from the public investors, as well as loans that can be used for studio expansion, adding infrastructure, and take on even bigger and more exciting projects. The second reason was corporate expenses. Helps to cover overhead costs such as rent, utilities, office supplies, clearing debts or outstanding loans that help the business function. The third one is brand visibility or popularity. Being publicly traded can enhance a studio's brand visibility and reputation to non-VFX people. You can see a VFX studio's name keep popping up in the stock markets to analyze its stock and its potential growth. So when a company goes to public, what's in it for the VFX artist? A VFX artist can gain an insider view of the operating costs of a VFX studio by reading their documents posted on their website, like RHP, red herring prospectus, and other information, and quarterly or yearly earning calls in their respective company websites. Since everything is transparent, it will be a good opportunity to see the actual profit loss numbers behind the studios. Publicly traded studio can attract and retain talents by offering stock options and equity grants. While there are many positive things, there is also a negative consequences. The first one is creative sacrifice for the shareholder value. Publicly traded companies are under immense pressure to deliver consistent profits and meet shareholder expectations. This pressure can lead to decisions driven by short-term financial gain rather than committing to artistic excellence. Second thing was talent exploitation and burnouts. The pressure on publicly traded studios to maximize profits may lead to severe cost-cutting measures, which often translate to underpaid and overworked artists. This exploitation not only harms the well-being of the talented individuals, but also jeopardizes the quality of the work produced. Risk of takeovers. Publicly traded studios are more susceptible to takeovers by the large corporations, such as buying bulk of shares and it potentially diluting their own unique creative identity and focus. Fluid situation. If there's a large disruption like a pandemic or currently going strikes, mass resignation of employees can disrupt the company's growth, which leads to a drop in stock value and leads to bankruptcy. Visual effects studios going to public should not be taken lightly. While it may promise access to capital and growth opportunities, it also carries the risk of compromising the very essence of what makes the VFX industry special.